Welcome. This is Robert Shemin with my good friend and business associate Jacob Venner. Good to see you.
Thank you, Robert. Good to be here.
And we have been working hard lately. We want to tell you what it is. We have created a new company called Esscencial Property Group.
Yes, that's right, Robert. Esscencial Property Group.
And I'll tell you what, for all of you people that like to invest like we do, we've completely changed directions. And here it is. Jacob came up with the idea. It's so simple, kind of so essential. It's kind of amazing, and we are in the middle of it. We're doing it, and just want to let you know what we're doing so you can learn from it and see how we pivoted in these kind of interesting market times. Jacob, tell them exactly how you came up with the idea and what we're doing.
Sure, Robert. Well, as we all know, we're in the middle of this pandemic now, and a lot of businesses have now been classified as essential and non-essential. So that got me thinking in the first place of what kind of properties we want to own going forward. And in these unstable times, we're not sure where the economy is going. We're not sure where the values are going on the assets we normally invest in, which are apartments and other commercial types and flipping houses and those sort of investments. We don't really know where that's going right now. So it got me thinking of what kind of deals do I want to do at this moment going forward. And that got me thinking about all the essential businesses. We can clearly see what's open and what's not during these tough times. And the ones that are open are the ones that we want to own. So in a nutshell, we're going to be buying big name national brands. Some of you are familiar with Family Dollar, Dollar General, CVS, Rite Aid, Walgreens, these type of assets. They're all under triple net leases, which if you don't know, which means the tenant pays all the expenses. And yeah, so I started thinking about this, and those are the kind of properties we want to own. The properties that are doing exceptional in this time of crisis.
Yeah, and they're in business and they're doing well. And we've looked at all the risk factors, and they seem lower than most things because, as you know, some businesses are doing well, but a lot of businesses have been wiped out. And I think the most important thing right now is we're not looking to hit home runs like we usually do with that 20, 30, 40% below market.
Absolutely.
Get all this great bang, fix stuff up, work really hard, because we're not sure where the market's going. So the most important part of investing is save your money. Make sure your money's there.
Absolutely.
Reduce risk. These are essential stores in low, moderate income neighborhoods that are doing well, that have leases. And then the most important part is we've had to really learn these micro markets. And the most important part is the leases and the neighborhoods, the locations. So we've sifted through literally, and you've done a lot of it, hundreds of these locations, and they're all throwing off between 7 and 9% about.
That's what we're looking for, yeah.
On these leases. Again, not home run stuff, but hey, I've had friends that have lost 10, 20, 30% or are getting no income for the last few months, and that's what we don't want. And we know these businesses are going to stay in business. We've looked at all the risk factors, like home delivery, Amazon competition. Doesn't seem to be an issue here. A lot of these stores can do well in small markets with 20, 30,000 people around.
Absolutely.
And we've learned to develop models to see where the best leases are, the best locations. So we're kind of going to the safer of the safer. And then, of course, we have some value-added things we can do, like lease renegotiations.
Of course.
Because the only risk is if the building goes empty, so that's all a function of these leases, and there's automatic rent increases.
Absolutely, and it's important we choose locations that are established. That's the goal here. Really, the whole point of this thing is to have very stable cash flow and a very safe place to park your money. Right now we don't know what's safe and what's not with the stock market, with the other real estate markets, but with these assets, it's extremely safe. They all have corporate guarantees, and right now we feel like this is where we want to be. So.
Yeah, and we're going to raise $10 million, which you've already started, and it's going well. We're involved. We're going to get a first mortgage on these properties from our lenders, who we have nice relationships with, and of course we're always out there shopping for the best deals. And the company, which is basically Jake and I, the sponsors, will be managing everything and doing everything where there's really not that much to do. Of course, make sure it's maintained, picking the spot is the best one.
Absolutely, and that's what we love about this. It's very predictable. It's very predictable. The goal is to raise $10 million for the first round and place between 35 and 40 million in the market. That'll be giving us 25 to 35 stores. And
With diversification is important.
Absolutely.
Because someone can go out there and buy one store or two stores, which is nice, but you have risk, there's no diversification.
Absolutely.
And there's economies of scales and experience.
That's exactly it. We're trying to do this to scale.
Our goal shortly is to raise about $50 million and control about how many stores?
I'd say 100 to 125 stores, depending on and which we buy at that point. And we're going to start off with the brands, the Dollar Generals, the Family Dollars, the CVS's, the Walgreens, these types. But the goal is to transition as well into essential industrial assets. And the essential businesses go all the way up the food chain, and that's where we want to be involved in. People that are necessary, operating in the toughest times, and that need to be here and are not going anywhere. So that's what we're doing.
Yeah. And the numbers are nice because we're going to take on a few investors, not many. And if they do come on, they'll participate in probably 7 to 9%, pretty much fairly stable returns. I mean, these leases are locked in, the expenses aren't there, we're not doing rehabs.
Absolutely.
We've checked the assets. And then, of course, they'll participate in the equity along with us, depending on their participation.
Absolutely.
And, we've looked at the downsides, and of course, there's always risk in any investment, correct?
Yes, there is.
But we really can't find a lot in this. And that's where we really want to spend a good part of our time. And Jake and I together probably have, 40 years experience in all types of real estate investing and relationships. And we're putting that together and using it. And then, of course, somebody could do one or two on their own, but they won't have the expertise. They won't know the markets and how to renegotiate the leases and the relationships with corporate, and, of course, the diversification. And again, we call this kind of in baseball, we're going to hit singles and doubles.
Absolutely.
We're not looking to hit a home run, but rule number one of investing, as one of my friends says, is not to lose money. And I've seen some of my friends wiped out, no income, no rent, business is empty for the last couple of months. Some are coming back. And we just want to be essential. We want to be safe. And what's interesting, it's a really nice niche. And we want to let you know what we're doing. Let us know if you have any questions about what we're doing or any interest in what we're doing. We'd love to talk to you about it. And you can contact us, either of us, if you know us. And again, this is not open to everybody. It's already happening. And we've already got stores we've targeted. So we're moving forward fast. We want to wish you a lot of success. And let us know if you have any questions about what we're doing. Love to hear about your strategies and what you'd like to do. So Jacob, thanks so much.
Thank you, Robert.
And we've been working a lot on this the last couple months, and it's happening. So much success to you, and look forward to seeing you soon.
Thanks, Robert.
Thank you, Jacob. Thank you.